Hey folks, Dan Frio here, the rate update. Today is December 1st. What happened to rates today? Don't go away, you'll find out here in a minute. Okay, so if you look at your 401k statement, you're probably like, not too bad. The Dow went up a little bit over 100 points. That's good news on that front. But you're going to see here the mortgage-backed securities market really got tanked today. But we really didn't have a huge move in rates. And again, like yesterday, we had that 22-point uptick, and we didn't really see rates tumble. And then today we see like a negative 30, and we don't really see a major move there. So I'll show you that here in 1 second. But some of the headline news is they're hitting a stalemate on the new Corona stimulus package. I could have told you that. There's going to be no headways there, but all hopes right now in the markets is based off of the Corona vaccine. So that's where we are there. On a note going down that path, I just received a call from my wife about 45 minutes ago, and her dad just passed. He was put in the hospital about 2 weeks ago. He just passed on us about 45 minutes ago. So if I'm not as upbeat as normal, my apologies, but let's get to it. So I'm not trying to be a downer on this, but I just want to let you know. So if you're watching the video and you're like, Dan, you're not as upbeat as you normally are, I didn't have too much good news today. So that being said, let's get on to what happened today with rates. You're going to see this number and kind of freak, which I did earlier until I really started digging into our rates. And so this number right here is what happened today to the price of a mortgage-backed security. A mortgage-backed security is the bond that trades on Wall Street that is one of the biggest factors in the composition of mortgage rates. Okay, and the way I normally say this is when this number goes, this is again the price of what happened to the bond. So in bonds 101, as the price in this way we've been seeing lately has been increasing, that is a drop in the yield or a drop in the mortgage rates. So as price goes up, rates or mortgage rates or interest rates go down. As it goes down, obviously, if prices or rates get better as it goes up, they get worse as it comes down. Well, we had a negative 34 today. I kind of expected that. If you don't believe me, go back and watch my video from yesterday. I said we should be trading right around in this range here. Okay? I didn't think we'd get there that fast, but we moved up. So it's probably going to take us a couple days, and we'll probably move back to the equilibrium down in this area. Why am I saying this area right here? Well, basically what you look at here is what happened in the last quarter. Well, the Federal Reserve has been stepping in. If I go back further, you're going to see there was huge volatility in the bond markets, not only mortgage-backed securities but corporate bonds. Okay, so what happened is the Fed stepped in and said we're going to stabilize the markets by buying when needed to stabilize the markets. So they've been buying, and you can see there's the fluctuations instead of crazy, they're slight. Okay. And so what you really break down is I look at 3 different indicators here or lines here, 100-day, 50-day, and 25-day moving averages. So you can see they all condense kind of right in this area here. There's the purple, the black, and the brown. And the purple, the black, and the brown is purple is 100-day, 50-day is black, 25-day is brown. So you can see if you break it all down, if you take the middle of this, we should be right in this range here. And the Fed, again, their goal here is stability. So we should be trading in this range within the next couple days, okay? So we've locked basically everybody in, expecting a further back and a pullback. So if you watch my video from yesterday, I said if I start seeing this trickle down, I'm going to start locking, which I did, okay? So if you're in the process with us, you are mostly got locked today. Because I don't see a reversal going over things. Why? Is because we watch also these indicators here. This is, if you look at these lines right here, I'm just going to look at that. I don't know if you can see the bottom. These are short-term and long-term ceilings. The short-term or short-term one previously was right in here, and I know that's not the most straight line, but it was a short-term ceiling right here that we kept hitting and stopping and hitting and stopping and stopping. We exceeded that, which created another ceiling. We didn't exceed that. So the thought process behind all this is we should be bringing back down to normalcy, which we should be trading back in this range. What that means to you with rates is rates are probably going to go up 0.1, 0.2%. Nothing crazy. Okay, so that's the gist of that, and that's going to be about a week turn time. So in today's world, it's really hard to figure out what's going to happen in a week, a month, a year, and so forth. So I take other data that we have, and I'm going to go through the economic calendar. One big thing that came out today is construction spending, which was way up. Okay, and I'm going to get to that in a second. The Dow was up 185, but one of the biggest things that shocked the system was, let me find it in here, the supply chains were compromised due to lack of workers. So what's happening is the supply chain, meaning getting products from one place to another and so forth, is really backlogged right now because of lack of workers, okay, causing freight to really skyrocket. The concern there is it could be inflationary. And the biggest threat to bonds is inflation. Okay, so I don't see this running out of control. It should stabilize. So my expectations for the next week, 2 month, nothing. Stability. Now from there is once the coronavirus vaccine gets distributed and everybody starts to take it, everybody's going to feel more comfortable and hopefully they get back to work. At that point, we will see a V-shaped recovery in February, March, April. And from there, things should be robust. And the next spring buying market to buy homes is going to be incredible. Because right now, buying is tapped out because of supply. So what that means is I'm saying through January, February, nothing really involved with rates or anything. From there, I start to see rates get pressured and starting to move up, as well as the housing market starting to heat up. So that's where we are in those areas there. Economic calendar for the rest of the week, really nothing that should surprise anybody. It's going to be basically payroll. It's going to be basically payroll and other job-related information, which should have no effect on the markets. So now let's get over and see what rates are doing today. Here's my daily rate trend, and I post this every day. It basically goes back through the beginning of the year all the way to now, and this is basically what's happening with all these rates. As you can see, the colors are color-coded down below. Blue is a 30-year conforming rate. The orangish is a 30-year jumbo. Gray is 30-year FHA, and the yellow is the 30-year VA. So this is basically, they took a composite of all over the country on where rates are today. And then they give a 1-day delta, a 7-day delta, and a delta from February 18th to today. Well, delta, I don't know why they put it in there, is a term that means difference. So there is a change. So a 1-day delta is a 1-day change. 7-day delta is a 7-day change. So basically nothing happened since yesterday, even though we saw the MBS market down 34. Jumbo rates went up 2 basis points. Now don't freak out. 2 basis points, what that is 2/100%. So yesterday, that means yesterday's rate here was 2.91. Because if it's up today 2, you take 2.91 plus the 2 equals today 2.93. Okay, so that's how these numbers factor in here. What I want you to pay attention to is over here. You can see rates, especially on FHA and VA, are 100 basis points, which is 1 full percent lower today than we were back in February. So if you have an FHA or VA loan, I highly suggest you get in touch with us because the rate's probably 1% lower than you have. We got several applications in today, and people were getting a 3% rate with like in the tune of $3,000 to $4,000 or $5,000 in fees. We were able to get each one of those clients that I reviewed 2.5 with no points or discounts. Discount is a point. So that shows you how you need to let us know where you're going, and so we can at least compare what you're getting with somebody else. And I'm going to show you how to get me your information so I can compare it against what I can do. So what somebody else is giving you versus what I can do. So now let's get on to my rate. How I break down my rates in its simplest form is just to give you a benchmark. Just like that indicator I just showed you, I'm going to give you one rate. However, just so you guys know, there is no one just benchmark rate. Rates vary depending on the loan amount, your credit score, the term, what kind of property you have. There's a whole slew of information that every one is an adjustment to the rate. So for example, I'm breaking down rates here. It is a $250,000 loan amount on a single family home that is your primary residency. And then here's the credit score that I'm using, and here's the loan to value. Just so you know, as the credit score goes down, this rate's going to go up because you're a riskier client. As this loan to value goes up in many cases, the rate goes up because, again, it's a riskier loan for the bank. Just think of it on the bank's terms. So you don't have perfect credit. Well, you're not getting the greatest rate in town. If you have absolutely perfect credit and you're not looking for a high loan to value, and I'll explain loan to value here in a second, you're going to get the best rate in town. So this is basically what your credit score would be, 740 plus. What's used is we pull all three repositories and we pull out your mortgage credit scores. Just so you guys know, you have over 32 different credit scores. So when we break this down, we're using TransUnion mortgage scores, certain varieties and other things. So our credit score might not match your Credit Karma or your Discover Card credit scores, and it won't because they're not using your mortgage score. All lenders in the whole country uses your mortgage score, just so you know that, okay? So right now, today, on my 30-year FH or 30-year conventional rate, if you're looking to buy a property or just do a rate and term, which means we just take your current balance and refinance you on a 30-year term, your rate would be 2.75 with an APR of 2.835. Okay? If you're looking to cash out, meaning you want to refinance your current balance plus pull out money to pay off bills, put an addition on, or so forth, at a 740 credit score at 75% loan to value, the rate would be 2.625. Okay, loan to value, I apologize, I didn't go over that. Loan to value means exactly that. Loan, so the loan amount, 2 divided by value of the property. So if you have a $100,000 loan and a value of 200, you take 100 divided by 200 equals 50%. So that's how you figure out your loan to value. So those are my rates right now on a conventional 30-year purchase rate and term or cash out. Okay? If we go to a 15-year term, my rate today is on a 740, 80% loan to value, purchase rate and term is 2.375. Cash out, 2.625 actually. They're all 3 decimals. And you can see because you're pulling out cash, it's a riskier loan for the bank or the lender, so you have a slightly higher rate. Okay, now let's get on to our government programs. FHA, VA, and USDA. Okay, I'm going to start at the bottom. Who qualifies for USDA? It has to be a rural property. Believe it or not, we got a loan in today. It's a purchase of a $700,000 rural property in California. And yes, look at the rate. Fantastic. Okay, so it has to be a rural area. The property address has to fit the USDA parameters as well as your income. You probably don't know either of those. So if you're looking in an area and you think it might be USDA qualifying, please let me know. Email me the address and I'll look it up and let you know if the property is USDA eligible. VA is for veterans. So if you're in the military or retired, God bless you. Thanks for doing what you did. You can do 100% financing if you purchase or refinance that property. So this one, a 740 credit score and up at 100% loan to value, I have a rate at 2.375. Down here, USDA, same thing. It's 100% financing, no money down. So the gentleman or the family buying the $600,000 home in California, no money down. no money down. FHA now, this is another government-backed or sponsored program. FHA requires 3.5% down, so meaning they'll finance 96.5%. All right, so if you're purchasing or refinancing and we go with the FHA program with a 740 credit score, your rate there is also 2.375. Look at these rates, guys. This is a 30-year fixed rate. 30-year fixed rate for USDA, VA, and FHA. Now, our creme de la creme, our jumbo programs. Here's our jumbo parameters. Jumbo, up to $3 million. Jumbo, up to $5 million. It's called our super jumbo. Purchase rate and term, 780 credit score, 60% loan to value. The rate does go up a little bit as this loan to value goes up. But these, just so you know, if you have a jumbo loan and your rate's higher than this, I got several in today. They were at in the mid to high threes. We're able to save them a lot of money. So in this case, your rate would be 2.875. The super jumbo, look at that. Same thing, up to $5 million, 2.875, 30-year fixed. Now here is where we stand out above the rest. We have a jumbo program up to $1 million. You have to be in one of these counties in California. You can go up to $1 million, 95% loan to value, meaning if you're buying a house, you only need 5% down. That rate is 3.5%. 30-year fixed, no points. Fantastic. So you're like, Dan, I like what you got here, but how do we get a hold of you? So, a few different ways to get a hold of us, and I'm going to show you that in a second. But what I ask people to do is, if you're in the process right now, building a home, buying a home, refinancing, you get what's called a fee sheet, fee worksheet, or a loan estimate. Please send that loan estimate to me before you close. Actually, right when you get started. Let's compare it. I might be able to save you thousands and thousands and thousands of dollars in closing costs or get you a lower rate. So that's what I get, probably 20 in a day. And probably 90% of them, we're getting them a better rate and or better fees. Probably a good 20% of those or 30% of those, we're getting better rate and lower fees on top of it all. Very rarely do I come back and say, you know what you got is fantastic. Sign it, don't look back, and move forward. So that's what I ask people to do. If you're not in the process yet, and you're like, Dan, what can I do? Well, give me some data. Send me a copy of your mortgage statement, and let me go through it and get back with you and say, okay, here's what I can or can't do. Would it make sense? Does it make sense? I'll have to pick your brain a little bit. You know, what are you looking to do? Are you looking to pull out some money, pay off bills? Are you looking to shorten your term? What's your credit scores? There's going to be some other things involved because I'm trying to take you down the right path to put you into the best program and the best scenario for what's good for you. So how do you find us, and how do you go from here? Well, the best way to do it is go to my website. It's therateupdate.com. Okay? Scroll down to the bottom. This is how you can get us over the phone. An 800 number, 844-775-LOAN. It's 844-775-5626. Or you can click any one of these tabs up here. The Apply Now, Home Purchase Qualifier, Refinance, Rate Checker, Get a Free Quote. They're all mini applications. Won't take you a lot of time. It's not a lot of effort. Just go through and put as much detail as you can. If it's during office hours, somebody should be reaching out to you. Myself or one of my loan advisors should be reaching out to you probably within a half hour, 45 minutes at tops. That's what most people do. Otherwise, if you would, email me. And the best way to get me is, my name is Dan Frio. So my email is D for Dan, Frio, which is Frio, at preferredrate.com. And just send me that loan estimate, send me your fee worksheet, send me your mortgage statement, whatever you can. Let me review it, and I'll get back with you, and hopefully we can help. So otherwise, God bless, guys. Have a great day. Be safe, and give someone you love a hug today. You don't know if they'll be there tomorrow. So take care. Bye-bye.